Sam, I'll start with you. A couple weeks ago, you wrote that Uber's IPO valuation makes no sense. That's when it was believed to be valued around $100 billion. Today, with the stock trading down another 8%, market cap somewhere around $63 billion, does it still make no sense?
Absolutely, it still makes no sense. You know, they're still have slowing growth. They're still losing $3 billion a year. I don't think it makes any more sense at $60 billion than it did at $100 billion.
You don't. Where would it make some sense?
You know, I don't think Uber has any real value as a standalone company because I don't think they have any real path to profitability. The question is if they're ever going to have any appeal to an acquirer. And I think at that point it becomes a build versus buy question. So you got to look at the capital invested at the business. We peg the valuation about 20 to 25 billion. That's the amount of capital that's put into the business. That's where we think there's a logic to an acquirer potentially doing a deal there.
Although if the losses continue, it's still tough for somebody to buy it. Barrett, coming back to you for a minute on the IPO itself. You heard Leslie, of course, sort of giving an analysis of what may have gone wrong there. Do you have any sense, you know, is it simply a function of the underwriters misinterpreting the actual aftermarket demand, or are there other things that stay at play here as well, perhaps, that we're not aware of?
Well, I think we may just be seeing an issue in consumer right now. And at the same time, I'll be a little bit of an apologist for them. They did raise $8 billion. They are a company that spends a lot of money, so that's quite a win. At the same time, I think it's fair to say this isn't how anybody draws it up. So, you know, but who's to blame? I'm not so sure that there's really a specific party here. The timing was obviously clearly unlucky. But I also think it's probably important to point out that this is one point in time. Over the long term, this is probably fairly meaningless. Over the short term, it's not. But certainly over the long term, there's still a lot here to be worked out.
Yeah, no, and they made that point as well. Nelson Shai did when we spoke to him on Friday. But I do wonder, you know, there's some unique things about Uber. I mean, obviously, the size of the deal, so much stock already in private hands. They tried to prevent people from shorting it or hedging it. Do you think that may have played a role here at all in terms of some of the selling that we saw?
I don't know about the fact that they were able to limit the shorts, but I would add to what you're saying. I mean, Uber is truly ubiquitous. You know, I think that term is thrown out probably a bit too much, but this is a brand that has become a verb. This is a company that my 3-year-old knows what it does, as does my 7-year-old father, and literally everybody I know. And it has had such a significant impact on everyone's lives that I wouldn't be too quick to sell them off. I think it's a really rare company for this day and age, certainly in the private space, but then transitioning to the public markets and having an IPO of this sort of weight and excitement, I think it's hard to navigate. And so I think in another way, it's probably a win that they were able to even get out with the way everything was going down last week.
Sam, it raises the inevitable question, will this put a chill on the market for all of the pending IPOs now?
I think there's a definite possibility that it will. But at the same time, you look at all these other IPOs, what's their option? You know, they need to raise more capital. If you look at all the early investors, all the venture capitalists that are in Uber, anyone who invested in the past 3 years in the private markets is underwater now. I don't think there's going to be a lot of private appetite for these unicorns, and so they might have no choice but to do an IPO, even if that's at a disappointing valuation.